Stable Lad coming at you. It's Monday, November 17th. And I just wanted to come up to you with a quick kind of update for the week. I'm just going to try to keep this pretty short, video short. I'm not going to go into so much detail with what's going on in macro. But I just wanted to say a couple of things and then kind of what that means just for my portfolio and just sort of risk side. So I've been talking about for a number of weeks how the news cycle that was coming out was just so bullish. And it still feels like that to me. It just feels like a kind of a coiled spring that is ready to break to the upside at some point in terms of just the overall business. But, you know, like when sort of market structures change and there's volatility setting in, you kind of have to sort of sometimes pivot and just sort of admit that maybe the bias needs to go bearish a little bit. I don't know how long this lasts for. You know, I don't know if we're going to go into a full-fledged bear market. I don't think anything really looks like the way it used to. And so when we look at these historical sort of things, these historical charts, like I don't know how much, like the sample size is pretty small. When we talk about Bitcoin, we're talking about 15 years of sample size. And we're talking about markets that were really immature years ago. So I just wanted to kind of just break down, talk about a few things I'm seeing, but then also what I'm planning on doing and what I have already been doing in my portfolio. So Bitcoin this weekend yesterday on Sunday breaks its major 50-week moving average support. So 15 years in a row when this happens, and then when there's a confirmation the following week, this essentially means that we are in a bear market, right? For the past 15 years, that's what that's meant. Those two signals have been 100% accurate. Will it be accurate this time? I don't know. Will Bitcoin find support this week and break above its 50-week moving average and invalidate this bear market trend? Totally possible. Nobody knows. You have people that are saying, okay, this is 100% a bear market. The top's already in. There are people saying, okay, 60 to 70% most likely that we're in a bear market, but we have to invalidate this week. So I just wanted to point this out. Traders will look at this. I'm not a big technical trader guy. All this, when everybody is looking at the same thing, it doesn't mean much to me other than everybody's looking at the same thing. And so, in my opinion, that just means like people are watching this. And if it breaks below, it just means sentiment is crap. And who's going to step in and buy, right? And if sentiment is crap and every trader and every institution or everybody is sort of looking at this particular thing and it breaks, does that mean we kind of have capitulation from everybody else and say, okay, let's go to cash and buy again later? It's possible. Just something worth pointing out. The other thing, another kind of macro thing, is we've had a bunch of Fed chairs that have come out and said we are not lowering rates in December. Powell said it in the last meeting, but we've had a bunch of Fed chairs also come out and say recently, like, the market is showing us signals that say it is not time to cut rates. So if it's not time to cut rates, maybe we have another month or so in which rates sort of stay flat. And people were kind of expecting, hey, based on where things are, we're going to have more rate cuts, which means more liquidity in the system, more easing. That means more cash, and that can flow to risk assets. Okay, so that's just another sort of thing to mention. The last thing to sort of say, right, is, and I mentioned this on the last update I did before I took a little break, is that when we have these huge liquidation events, and we had the biggest liquidation event in crypto history, almost $20 billion, there is, the dust has to settle on this. And the fact is, what we have here is we have people that were just wrecked, completely gone out of the space. They're no longer buyers, right? They don't have cash anymore, right? Some people will. Some people maybe weren't entirely wrecked, but they're going to be a lot more cautious now, right? Maybe they only buy. Maybe they just put in stables like us, like what I talk about in this channel. They put in stables and they earn yield and they just yield farm. Maybe they're just buying the big ones like Bitcoin and Ethereum or Solana or whatever. Or maybe they're just staying out entirely and saying, you know what, equities might be safer for me. I'm just going to go invest, take the cash I have left and go invest in an index. I don't really know. But what I do know is these events have long-lasting effects on crypto, especially on like alts and things like that. So when we look at crypto as in whole and as a general, right, like we're looking at like who's the new buyers. We have all these whales, these OG whales that were waiting for the $100,000 mark, and they've clearly been selling into this. The new buyers are not the whales. They're institutions, they're 401ks, they're people that are buying these Bitcoin and Ethereum ETFs. And from what I've read and think about and hear about, most people only care about Bitcoin and Ethereum. They don't care about anything else. They care about Bitcoin and Ethereum. And so as those new buyers come in and as the old buyers come out, you have these markets that are really volatile. Couple that with some of these actual real macro things going on, and we've got a lot of volatility. I think we're seeing the AI trade unwind a little bit. We're seeing some problems in other markets like Japan. So all this means to me, again, I don't know if we're in a bull or a bear market. Even if we are in a bear market, I don't think it's going to be extended. I think if you could even call this last year, 2025, a bull market, which I don't even know if you can call that in crypto. I don't even know if I would consider that a bull market. So if that was our bull market, it lasted a very short time. I expect a bear market to last a very short time. Our government's going to keep printing. Trump's going to keep going. The legislation is going to continue to be favorable for the next 3 years. We may codify into laws some of these things in crypto favorability, which means that even if the next administration comes in and they're hawkish on crypto, some of these things are going to be in law. So I'm still pretty bullish long term, but short term, we got to acknowledge what's what. And so what does that mean for my portfolio? I'm getting rid of everything that I think is higher risk.
Let's take a quick pause. If you'd like a simple reference guide that shows you how I think about building a stablecoin portfolio, from risk tiers to position sizing, and even how insurance fits in, I've put together a free guide you can download. It's the same framework that I use myself, designed to keep things steady and easy to follow at a glance. The link's right below this video. Grab the guide, and while you're there, make sure you're subscribed so you don't miss the weekly updates I share on how I'm adjusting my own portfolio. All right, let's get back to it.
That's things like I had some exposure to USDAI, right? So USDAI is a cool new stablecoin. I mentioned it on one of my previous videos. I had a tiny bit of exposure to it in a Pendle fixed USDAI vault. I'm dumping those. I'm getting rid of anything that's high risk or even like kind of high medium risk. That's another thing like this. Agora, they have AUSD is their stablecoin. This is backed by actual digital. This is backed by dollars, right? So it's a institutional grade, backed by reserves and audited, but it's a newer one. So I'm just not trusting it right now. So even though I think it's totally safe and totally fine, I'm getting rid of it. I'm moving into more things like USDC mostly, USDT mostly, and then the two kind of higher risk stable coins that I'm keeping would be Sky's USDS and Aave's Go. And then I'm moving also outside of stablecoins. I'm putting more money into quality and less complex positions for investments. Things like Aave, for example, right? We still have some nice amounts being paid, 6.3% being paid on Aave on the Plasma market. I'm not putting too much in Plasma because Plasma is a new blockchain for me. So I'm going to try to stick to some of the more longer standing layer 2 blockchains, things like Base, which again, these are a little bit less. They're paying a little bit less, under 4% right now, which is not that nice looking, but I'm just moving some more things into quality, right? So I'm going to stick to Go is paying 4% here. I'm sticking to some of these things that in more mature markets. And then something like this, for example, we have 6.5%, which is the Go savings account on mainnet. And I'm probably going to start moving a little bit more over to ETH mainnet because I think that's where some more lower risk opportunities are going to be. I'm also going to start doing some more market making on Uniswap again. These are, they go up and down, they swing up and down, but I think that Uniswap is just a great place. And I'll probably also, if the markets are good on some of these other chains like Aerodome, for example, or even what was formerly known as Trader Joe's, LFJ, on Avalanche, I might do some market making on there. So I'll start maybe talking a little bit more about market making. But yeah, we have got some of these, like some decent, nothing crazy, but we've got some decent stuff here. We've got on Arbitrum DAI USD paying. Oh wait, here I had some bigger ones here. Excuse me, here it is. Let's go back up here. Yeah, USDC, USDS paying 10.71%, right? We have, I found another one here, USDS, USDC paying 7.24%. Again, these are a little bit smaller. I'd like bigger markets, but things that I'm considering here. Here, DAI USDT, it's got 7.8 million in here, paying 14% right now. Again, these will fluctuate up and down, and this is on mainnet, by the way. So these are just sort of things I'm going to start to look at, and I'll start to mention on the channel. Compounds got nothing really crazy going on Compound markets, but we got a bridged USDC coin on the base network paying 6%. So these are things I'm going to be kind of taking a look at. And then the other thing that I'll mention too is you'll have, I didn't pop it up here, but let's just take a look here. On Beefy, for example, we can take a look at some of the vaults, and let's look at stablecoin vaults. So we've got something like this on Compound, right? So this is the USDC vault on Compound, and they're compounding at 9.36%. So you could take insurance out on this one, and it doesn't bump up the risk grade, right? So putting it to Beefy would be a medium risk trade for me. So I would take a low risk thing like Compound, and I would just add a little bit to it like this on Beefy for 9.36%. So again, it becomes a medium risk kind of thing here, which means I'd cap it at 5% of my portfolio only, and I'd take insurance out of it, which maybe would lead me to bump it up from 5% to max maybe 6 to 7%, somewhere around there, but it leads me to earning a little bit more APY. I'll talk about these more in future videos, but I'm just sort of broadly letting you know what I'm looking at. And then we got Fluid over here, which I noticed, this again is not going to last, but it's on Polygon paying 23% on USDT, which again, I doubt this lasts long at all. This is going to pop down to 6% maybe or something less, but right now it's paying a super high amount at the moment. Probably by the time I send this and recording out, it drops down dramatically. But look, you've got USDC on Fluid paying 6.8%. Let's just quickly pop over to base, 6.5% USDC. So these are good, safe things. I'm just going to start to migrate a little bit more to quality, and to make sure that as the markets get stressed, if the market goes into sort of a deep bear mode, I'm protecting my portfolio from severe stress. So in bear markets, I plan on making less money. And in bull markets, I plan on making more money. And then the average out over the year, I plan on hopefully beating the S&P, just beating regular markets with less volatility in my portfolio. And so at this point, I'm preparing for a bear market. I don't know that we get there. And if we do get a bear market, I don't know that it lasts all that long. But that's what I'm doing with my portfolio. I'm just sort of thinking a little bit more bearish and a little bit more sort of protecting of the portfolio than I might normally do in a bull market, where I would take advantage of maybe a little bit more of the exotic things. I'm divesting of stable coins that I just haven't experienced the stress of bear markets before. Will USDI work fine? It might be fantastic. And if it proves itself in a long bear market, great. This will bump it up from a high-risk stablecoin to a medium-risk stablecoin for me, and then I'll size those appropriately. But right now I'm divesting of anything that doesn't feel really like super low risk to me, and I'm moving into more quality solutions, like more into Aave, more into some market-making opportunities which fluctuate in terms of APY, but I think are safer in terms of putting my stable coins in there. So that's it for me. That's the update for Monday. Have a great week. Stay safe. Stay stable. I'm the Stable Lad. Until next time.
I'm the Stable Lad, and if you liked today's video, please hit that subscribe button. Every week I break down what's happening in the world of stablecoins and why it matters, clearly, calmly, and without the hype. This channel is for educational purposes. It is not meant to be financial advice, so always do your own research and manage your risk wisely.